Welcome to the HKMA Podcast. I'm your host, Shusi He. In the digital age, think about how you interact with your bank today. You go online, fill in forms, and maybe wait a few days or weeks before a credit card upgrade or loan decision. But with the development of technologies such as artificial intelligence or quantum computing, what will banking services look like 5 years from now? To get the answers, I'm joined today by Nitish Koladoo, who is from the HKMA's Banking Supervision Department. Nitish, welcome to the podcast.
Thank you so much for having me.
So as I just said, under the HKMA's vision, in the next 3 to 5 years, what will banking services be like for general public or the businesses in Hong Kong?
So the big shift in banking is to move from reactive to proactive banking. So in the past, banking services would work like this. You need a service from the bank, you need to go fill in the form, it takes really a lot of time, and then you need to wait for the bank to respond back to you. But under HKMA vision, this is changing. So banking is becoming more connected, more anticipatory, and more intelligent. So how will general public be feeling the change? So first, smarter and faster access to finance. So AI is already analyzing your real-time cash flow, potentially find a gap in your funding, and then match you with the right financing product and inform you about it. Second, you have paperless and faster trade transactions. So documents like invoices, bills of lading, and also shipping information are already digitized and put on change. So it is visible to all the different concerned parties, which makes it paperless, better visibility, and improved transactions. Third is better protection and more secured services. As we go more and more digital, resilience matters more. Also, we need to have high-performance computing that will be running more simulations, more FX hedging transactions, and make transactions faster. So it is not about banks just building better apps. It is about transforming the wider ecosystem. The banks, the fintech firms, the consumers also, supervision, but also talent is very important. In the next 3 to 5 years, banking should change to faster, sees further, and also protect smarter. This is not science fiction, it is part of the blueprint.
So it's like the banks become your financial partner,
Exactly.
not just a service provider.
Yes.
So maybe you can give us an example, say an SME owner in the cross-border trade sector. What will their Monday morning look like if what you said is actually realized?
So let's take an example of a SME. So Kate, on the Monday morning, she checks her phone and her bank is already flagging a potential funding gap. So the banks already match her to the correct financing options and she just clicks and it gets approved. But then, because it's cross-border, you have the trade side. So all your documents, invoices, payments timing, business pattern are already digitized and visible to the bank. So this makes credit approval easier. And then you have the cross-border trade risk. Because cross-border includes FX risk, so the banks is already running simulations using high-performance computing or today's classical computers, and then already propose the best tailored hedging to the client. So all of this is done in a very effortless manner without the client moves to the bank. So what does this mean for smaller firms? So it means that smaller firms will be having access to more services that previously was expensive, was harder for them to access, and also was slower.
That's very critical, right? Especially among all uncertainties in today's environment.
Yeah. And also, so we see a very fundamental shift. The infrastructure is becoming more and more invisible. Services that is being provided to the clients are becoming more and more useful and rapid.
Right. I believe a lot of people would like to become Kate.
Yes.
In as short time as possible, right? So let's talk about how to get there. I remember a few years ago, the HKMA set out the vision, all banks go fintech. By 2025, which is last year, if I look at numbers here, 95% of banks, including all the retail banks, has done it. So job done. Why does the banking sector need a whole new blueprint right now?
We have to be conscious that adoption is not the same as transformation. So 95% it's a strong phase, but we have noted that banks are adopting fintech solutions which are isolated use cases, they are running a lot of pilots, and they are just adopting digital tools as fintech solution. But this doesn't mean that they are deeply embedded into the customer journey, their core business operations, and transforming their business model. So this is the gap that Blueprint is trying to bridge in here. So we are shifting focus from pilot to pioneer, from breadth to depth, and from adoption to advancement.
So it's like getting a person to have a smartphone. It's not the same as to use it wisely and smarter, right?
Exactly. It's not the same as tapping into all the advanced features that a smartphone has. You may be thinking about why now? Because timing matters. So most of the banks are either increasing or maintaining their fintech investment over the next few years. So the key question is not about whether banks will be adopting fintech. The key question is about whether fintech is being used deeply enough to get the tangible business value out of it. So 95% is not the finishing line. 95% is the beginning of the next phase. And this time we have set the bar higher for the industry to become more advanced.
So I noticed that in the blueprint there is a framework that actually focuses on 3 advanced technology enabler and 2 very critical foundations that are supposed to drive the next wave of financial innovation, right? So could you please tell us more details and how do they correlate with each other?
The easiest way to imagine this is as a skyscraper. So at the base, you have data excellence and cyber resilience as a foundation. On the top, you have the 3 technologies: artificial intelligence, high-performance computing, and distributed ledger technology. So why the foundation is important? Because if you have weak data in place, this may result in weak decision by your AI. If you have a weak cyber resilience in place, more digitalization will bring in more risk.
So it's like the foundation determines the ceiling.
Yes, exactly. The foundation determines the ceiling. This is why you cannot build smart banking on weak data or weak cyber resilience in place. So the stock take reflects that concern. So we have 73% of surveyed banks cited risk associated with new technology as one of the key concerns, and also 61% cited data privacy and cybersecurity concern. Then we have the technology on top of it, each playing a different role. So AI and DLT will be driving the visible changes, services that banks will be providing to their consumers, including the different concerned parties. And then you have high performance computing, a stronger computer that can do use cases such as FX hedging or more tailored support risk. So like you mentioned, so it is the foundation that determines the ceiling. And what we are looking forward is not isolated use case, but integrated infrastructure.
You mentioned a lot of technologies like AI, DLT, and high-performance computing, including quantum computing. And you also mentioned something, cybersecurity. I think that is on top of the minds of many consumers as well as banks, which reminds me of another thing that is quite novel in the blueprint, which is called the Quantum Preparedness Index. Could you please let us know what is it and why should people care about it?
Yeah. So quantum computing is a new kind of computing. It is not just faster than today's classical computers, but in some cases, it is much more powerful for some of the tasks that banks will need to carry out in the future. So why should the banks care about it? So banks rely heavily on encryption. So encryption protects our payment information, our data, digital identities, and secure communications.
So every time we log in and facial recognition, you type in your password, every step is actually encrypted by the banks.
Yes.
With some technologies, right?
Exactly. In the future, so sufficiently strong quantum computers may weaken some of the cryptography keys that banks are currently using right now. So this is why we have to start early. But the key message is not about panic, it's about preparation. So we have the post-quantum cryptography that will come after the post-quantum, which we call the post-quantum era. But most importantly, we need to distinguish between quantum computing and post-quantum cryptography. So quantum computing is an emerging technology. And PQC, this is a defensive response to it. For banks to deploy PQC, they do not need a quantum computer. It's just about deploying the algorithm that in the future will be stronger against quantum threat. So currently the quantum adoption is at 7% and projected to rise to 53% by 2028. So we have to be clear here that the statistic refers to the quantum adoption, not the PQC adoption.
Now we can talk a little bit more about the Quantum Preparedness Index. What is that?
Yeah, so the Quantum Preparedness Index, or the QPI, so it is assessing how ready are banks for the post-quantum era, especially around PQC transition and broader quantum readiness. So we look at it through 4 pillars. So awareness, planning, pilot, and practical preparedness. And in practical terms, the HKMA will be looking at questions such as whether the banks understand their quantum exposure, executive leadership awareness and support, transition planning is in place or not, and whether pilots governance are being built in. So this gives the HKMA a baseline view where the sector stands currently and help to set targets and support with practical guidance. But it's important to flip the narrative here. Quantum is not only a future risk, it has a lot of future capabilities, such as portfolio optimization, price derivative, and more personalized FX hedging. So the sector needs to be quantum ready, not quantum vulnerable. And the HKMA is moving early because the transition itself may take years.
So the regulator is like a navigator for the industry to be quantum prepared. And you need to collect enough information to understand where they are and in terms to find out how far they can go and when can they do it.
Yeah, exactly.
So we talk about quantum computing, and now let's move on to another emerging technology that many people are talking about, which is AI, artificial intelligence. If we look at the AI adoption in Hong Kong banks, we can see that the number has gone from 59% to 75% in just 3 years. But there's some research also finds that the adoption is mainly internal facing. So could you please tell us how banks in Hong Kong are adopting AI right now, and what does genuinely advanced AI adoption look like?
First, we have the traditional AI. So we have use cases such as fraud, scoring, automation, surveillance, and then we have generative AI. AI that can work with unstructured data, supports anti-fraud and analysis of heavy work, and also more capable of customer interactions. So you rightly pointed out that we have an uptake in the adoption of AI, and most use cases are still internal facing and standalone, and they are not deeply embedded into customer facing or more practical and innovative use cases. So this is where the generative AI sandbox comes in as a key enabler. So we provided a controlled environment where banks can test more customer-facing use cases and more practical and real-world Gen AI applications.
Could you give us an example in terms of the use cases that maybe you find quite relevant right now?
So we have several use cases such as anti-deepfake that tackles anti-fraud, and also we have use cases such as banks helping using Gen AI to draft marketing use cases, but also some of the compliance and submission to the HKMA.
Right. So the anti-deepfake, I can imagine is like use AI against AI.
Yes. So it is using AI to combat AI. So the internal use cases that you mentioned is not due to a lack of interest from the banks, but uncertainty. Uncertainty around accuracy, uncertainty around risk, and supervisory expectation. So the sandbox helps to reduce that uncertainty. And also it shows that the HKMA is actively promoting the adoption of responsible innovation and not slowing it down. We also have to see on the other side, which is a talent development. So currently banks want to have talent that knows technology, compliance, business operation, and also risk. It is a rare combination to find. And the industry demand for generative and compliance skills is real. So this is why the HKMA is also coming up with initiatives such as a competency development skills framework, the training programs, repositories, and tools such as a GenAI prompt reference library and other practical resources. And the blueprint also shows that there's limited revenue generating AI use cases. This is why the HKMA is also focusing on the ecosystem support. So we have different initiatives that has already been implemented that will help banks to identify stronger use cases and also bridge the gap between the fintech solution providers and the banks for a more collaborative ecosystem. In the near future, so AI must become more trusted and scalable. So we have to move from experimentation to implementation.
So we talk about the vision. What does success look like by 2030?
So by 2030, success is not only banks trying to adopt fintech. Success means banks using fintech to transform the way they are doing business. It is embedded into their operation, customer journey, and even in compliance activities. So if we look at success through the HKMA lens, it has 3 layers. Banks need to be more advanced, the system needs to be more resilient, and Hong Kong needs to be more future ready. In 2026, we will publish the QPI baseline and also the FinTech Cyber Framework. In other words, the building blocks are being put in place. 2027, 2028, so the blueprint should show some visible change in the system. So we'll have more granular data flowing to the HKMA, and also we'll have more stronger infrastructure in place. The most important milestone is whether banks have reached the advanced maturity. So advanced maturity means that fintech is not just bolted on processes. It is used to re-engineer the processes and delivering tangible benefits to the bank. By 2030, success should look like a sector that is AI-enabled, cyber-resilient, data-driven, and quantum-prepared, and able to integrate technologies into banking mainstream operations in a scalable and safe way. So the real test is about Hong Kong building the architecture of tomorrow, today. That is what future ready means.
Okay, thank you, Nitish. But before you go, I would like to ask you a few quick-fire questions, and you can answer them with only 1 or 2 sentences. Okay, so the first one, a small bank with limited resources is watching right now. What will be the most practical first step they can take towards the HKMA's vision?
Start with one real business use case, not with a technology. So pick a low-risk, high-friction area and use the HKMA tools in order to test something practical.
The next one, some argue that the more banks digitalize, the more fragile the global financial system becomes. One cyber attack away from a major crisis. Is that a fair concern?
It is a fair concern, but the answer is not in slowing digitalization. The answer is to have resilience inbuilt at the beginning.
Okay, the next one. We have seen crypto winters and AI hype cycles. How does a regulator tell the difference between a real technological shift and the next overhyped trend?
So regulators will look for real use cases, measurable values, and manageable risk. If the technology is improving the outcomes in a repeatable way, it is probably more than just a hype.
Okay, the final one. In 10 years, will people still be talking about fintech Or will it just be banking with technology advancing so quickly these days?
Fintech will be used probably less and less. Overall, it will just be calling banking or just a tech firm.
Just a tech firm. That's interesting. Okay, I think the answer to the question we had in the beginning of our conversation is very clear. The future of banking is not just about more digital, it is also about more intelligent, secure, and proactive. Thank you, Nitish, to join the podcast today.
Thank you so much again.
And for our audience who like to know more about the HKMA's FinTech Promotion Blueprint, you are welcome to visit our official website for more details. Thank you for watching the HKMA Podcast. See you next time.